Good morning, ladies and gentlemen. This is Greg Sabala for National Brokerage. I'm joined here today with Dan Hudgens, who's the Regional Vice President of Protective Life. We are starting a new process of quarterly. We're going to bring in a feature carrier, and I'm really excited about Protective Life today because they have a very unique sales idea for using of a 1035 exchange, not one that's very advertised, and it's one that's might be a missing component to your marketing advantages with your competition. So without further ado, I will hand the floor over to Dan Hudgens, and I will obviously inject into the meeting as well with different commentary as we go. So Dan?
Perfect. Thanks, Greg. Appreciate it. Thanks, everybody, for joining. Yeah, as Greg mentioned, this is a really interesting idea in that it's very applicable to the clients you're dealing with today. You're going to have a lot of scenarios that match what we're going to talk about today. And there's really not a lot of other opportunities out there as far as product that can support this type of design. So glad you're able to join us today, and I think you'll get some valuable information out of this. So just a real quick overview. I'm going to give a couple seconds here, a little bit about Protective Life, just in case you're not familiar with us. And then we're going to go into the idea. It's called a split 1035 exchange idea. And the design there is to leverage the largest death benefit that you can get using 1035 funds. So like I said, I think it's a scenario that you've run into before and you run into frequently, and should be a good scenario for you to actually go through and look at some cases that might be on your desk or might be waiting to reach out to a client on. And then we'll go through some action items and what you can do to actually make this happen in your practice. So a little bit about Protective Life. This really is our value proposition. So when people ask me, what's Protective's deal? What's your strength? This is really our strength. We manufacture life insurance products that have the highest likelihood to perform as the distribution partner, you, the producer, and the client had intended at the time of purchase, which essentially means when you're running illustrations for protective products, we don't build a lot of complex moving parts into the products that make it uncertain that performance is going to occur. So we are primarily a death benefit focused company, and mortality is really important to us. So we want to make sure that we can accurately assess what a client's situation is and what they want in the future, and hopefully get that product to be as close as possible. So this also kind of outlines what we do. So we are obviously an insurance provider. We're focused on protecting families. Last year in 2018, we ended up paying out 59,129 claims, totaling nearly $2.8 billion. That's a staggering amount of families and loved ones and businesses that were able to continue on during a very challenging time in their life, and have the financial strains be a little bit less than the emotional strain. So that's what we do. That's what Protective Life is all about. What we're going to talk about today, again, it will help accomplish the ultimate goal, which is to provide something better for the client at the time that they or their loved ones need it. So let's go into the concept here. Maximize coverage with two policies. So what's the problem we're addressing here? So the problem is clients generally need both income replacement and long-term protection. So those are the two types of products, I think, or at least needs that most clients have. So according to LIMRA, the number one reason people buy life insurance is income replacement. The number two is for burial and final expenses. So usually income replacement is a term sale or a short-term alternative sale where we can figure out how many years left you have of working, in your career, in your working years, and replace the income during those years, usually with a term product. The burial final expense is a long-term permanent sale because we just don't know when that's going to happen. So when you're specifically talking about 1035 exchange scenarios, you can't 1035 into a term policy. So when somebody comes to you and says, I've got this 1035 exchange and this permanent product, you go through your needs analysis and you determine that there is income replacement need for that customer. Unfortunately, you can't take that 1035 exchange and leverage it into a term. However, with Protective, you can do that using our custom choice UL 10 through 30 product. So that's what we're going to focus on in part here. So let's look at who are your potential clients and your potential prospects. These are going to be people that are in their income earning phase. They have a cash value life policy that has cash value generated or building up, but their real focus is the death benefit. They bought that product not necessarily because it generated cash, and we see this a lot. We see people buying life insurance, especially whole life, where they wanted permanent coverage and they wanted some guarantees, and they were sold a whole life product that does provide those, but it also provides a lot of accumulation and can be somewhat expensive. So customers are coming to you saying, I've got this policy, but I need more coverage, and I have this cash value that's in there. They need more coverage because they have a higher income. The time has gone by. Now they're earning more income. They have more debt obligations potentially. Any other kind of short-term planning need that has come up or that exists that really isn't addressed by their current permanent policy. So those are your typical prospects. Let's look at a case here. Let's look at Matt. Matt's a 50-year-old male, and he is in this type of a situation. He bought an $800,000 permanent plan that currently has $200,000 of cash value, but Matt's income has grown over the years, and he's earning $125,000. So right now, the current policy just doesn't provide enough income replacement. So if he unfortunately passes away, his family only has $800,000 of death benefit. That's not enough to replace his income over the next 15 or 20 years. He doesn't necessarily need the cash value, but he likes the option. And he's at that age now where his parents are older, and his friends' parents are older, and they're starting to have some chronic illness needs. And he's concerned about what he's going to do for his family when it comes to chronic illness care. So let's take a look at what a typical scenario would look like. This is a perm-only solution. This is what most people are going to look at when they're in Matt's situation. They've got a $200,000 cash value. Let's see what we can do. Well, with Protective, we've got an option. If you're looking at a permanent product, we have our Advantage Choice Universal Life, which is a guaranteed death benefit UL. And what I can do is I can take that $200,000 and I can put that into the product, no additional premiums, and solve for the largest face amount that I can buy. That's just over $1 million guaranteed to age 95. So what I've done is I have provided a higher death benefit leverage, but not enough to replace his income, again, because I'm using all permanent. I don't have any cash value really in these types of products. So I've taken a large cash value and I've essentially eliminated it because I've tried to leverage the death benefit. I did add our chronic illness rider, which is called Extend Care. And that rider is really a simple rider to understand. I've chosen the $11,100 per month benefit. And this is a true acceleration of death benefit rider. So it's indemnity style, which means once he qualifies and is unable to complete 2 of the activities of daily living or a severe cognitive impairment, we will start paying after a 90-day elimination period, the $11,100 a month to Matt, and he can use that money however he wants to use it. It doesn't matter what kind of care he's receiving, where he's receiving the care. We don't need to see receipts or anything like that. So we've solved that concern, and that he knows now that he can get a monthly benefit for his chronic illness inside of this new permanent product. And I did this without any additional ongoing premiums. So obviously the flexibility of these products, you can continue to pay the same premium he was paying, and that will solve for a higher face amount. We just kind of wanted to show an example of what it looked like if you just put everything in and stopped. So there is some leverage there. It's not a bad scenario, especially because we get some chronic illness, but we only get about $1 million or a little over $1 million of coverage. So let's look at a different option. Let's look at taking that $200,000 and let's split that $200,000 into 2 different policies. The first policy I'm going to put it in is our Index Choice Universal Life, which is a very simple, easy to understand index product that has long-term guarantees. So in this case, I'm taking $125,000 of the $200,000, and I'm going to roll that into the Index Choice and solve for the most face amount I can get with a no lapse guarantee to age 95 through age 94, ending at age 95. So that death benefit amount is $536,559. I've also added that chronic illness rider that we talked about on the last slide. So same exact scenario. I've given him permanent coverage, I've given him chronic illness, and I've given him no lapse guarantee through age 95. We'll talk a little bit about the additional benefits of that piece of it, but I just wanted to start with the first half, which is permanent. Then I'm going to take the additional $75,000 that's left of the 1035 exchange, and I'm going to put that into our custom choice UL 20-year policy. So it looks like a 20-year term. We'll give him $2 million of death benefit on a single pay basis. Again, both of these are single pay, so we don't have additional ongoing premiums. And now what I've done is I've leveraged an $800,000 death benefit scenario into just over $2.5 million, with $2 million of that being a 20-year term income replacement play. So again, we decided he needed 20 times his income. He's at 125,000. So I've given him his $20 million or his $2 million of 20-year term, and I've also given him permanent coverage. Wasn't as much as the 800,000, but he didn't really need the 800,000 for permanent. He needed more than the 800,000 for his total coverage. So the IUL goes guaranteed through age 95, but it will run lifetime. So this will go through age 121, and in year 20, the cash surrender value is just under 300,000. So I've actually replaced his cash value and grown the cash value over the first 20 years because I bought a smaller face amount. I wasn't trying to leverage the entire 200,000 into the highest face amount. I leveraged 125,000 into a smaller face amount, which allows it to grow at a faster rate because there's less cost of insurance in there. And I also provided the Extend Care rider for him with the chronic illness coverage, and there's no additional ongoing premium. So this is a really good alternative to an all-permanent sale for anyone who has a short-term need and has a 1035 exchange. You just cannot leverage the 1035 exchange into a permanent product with a higher face amount as efficiently as you can into part term or part custom choice, as we call it, a universal life, but it functions like a term as far as 10, 15, 20, 25, and 30-year increments. You can get a much higher leverage in that product because the cost structure is so much lower. So let's go through and recap real quick, and then we can certainly take any questions from anybody that has any. So the split 1035 exchange for better leverage, I use the custom choice UL and the index choice UL, but you can also use our advantage choice UL, which is a guaranteed universal life product. So you can split it between either of those products. It provides more death benefit for those short-term needs that the client has. It also provides coverage on a permanent basis. If you use the index choice product, you can have cash value accumulation, and you can have the chronic illness rider, which again we call Extend Care, on both the advantage choice and the index choice products. So let's look at some action items for you to take away. Number one, go and look at the clients that you're working with that currently have 1035 exchange funds. Now, this could be something you're currently working on, or it could be a case that you might have reviewed in the last 12 months, and maybe you weren't able to get enough leverage in the death benefit increase to make the product work. Go back and look at those types of cases. See if there is a part short-term need, and that would be the number one question I would ask when you have someone with a 1035 exchange that's looking for a maximum death benefit solve. Ask them if any of that need is for short-term coverage. So Income replacement would be the easy one. You can identify that primarily based off of their age. Or if they have any kind of loan or debt protection needs, business loans, obviously mortgage, things like that, where maybe they're not in their working years anymore, but they have a large debt need that can be satisfied. So be thinking of those types of scenarios. We have a one-page handout that goes over this scenario that we just discussed. It's the exact same scenario. It is a consumer-approved piece, and you can actually access this piece on our website, which is www.sellwhatmatters.com. You can co-brand that marketing piece with your information, your name, your agency, your email, your phone number, whatever you want to put on there. You can co-brand that and then send these pieces out. We have pieces like what I just showed you. We have prospecting letters. We have banner ads for web pages. We even have short videos that are all customer approved. Everything on this website is consumer approved, that you can use as you're corresponding with your customers and trying to help them understand why they might need certain policies or certain protections when it comes to life insurance. So don't hesitate to go out to sellwhatmatters.com. The piece that we just looked at is simply titled Maximizing Coverage with 2 Policies. So you can go in under the index choice or the custom choice UL tab on Sell What Matters, and you'll find that piece. So little required S&P disclosure, since we did talk about our index UL product. And other than that, I want to see if there's anybody that has any questions. Greg, if you want to maybe see if there were any questions that came in the question box, and let me know and we can answer that.
Well, yeah, and if I could just add one other thing is, most of the people, the audience on this call is familiar with our NBGO process and some of the tools that we have built in there. One thing that I can add on to this is income replacement is tied for number 1 as a utilized feature within the NBGO process. So definitely clients are looking at that for obvious reasons. And like Dan mentioned, at certain ages, we just kind of know it's an obvious one as well. But it's a play that hasn't been able to be, capitalized on a 1035 basis until this, particular presentation. So it's a really good competitive advantage. With that said, we actually did discuss it with an agent that's actually not on the webcast today, but they had posed a question to us the other day regarding what is the process for applying for this? Is it 2 applications? Is it 1 application? How do they best apply for this?
Yeah, so I mean, it is usually cleaner when you do 2 applications. We have 1 application form for all of our products. So technically you could fill out 1 application and send it in. We would need 2 separate 1035 exchange forms because we're obviously putting part of it into one and part of it into another. We would only send the request to the other company with 1 form, obviously, but we just need those instructions. And then whether it's the index choice or the guaranteed UL that you split it into, we have supplemental forms. So you're probably better off just submitting 2 applications so that you know exactly what the split is. You can indicate the face amount differences between them and all of that, because there are going to be 2 completely different products. So I would recommend just 2 applications. And then we will do the split of the 1035 internally, of course, based on the instructions you give us. So really it's not that much different from what you would normally do, other than we have to be notified that there is a 1035 that's going to be split between the 2 policies. So if you've got a scenario, certainly we can walk you through the best way to submit the paperwork on that. But I think it's as simple as just 1 application for custom choice, 1 application for the permanent product, and then ensure on the 1035 paperwork for each how much of the paper or the split is going to go to each product. So pretty simple, but we can certainly help with that. And since it's a term and a permanent, I would recommend two applications.
Great. And then one additional question that was posed is, do you guys take 1035s with loans on the existing policy?
Not on these specific products we've talked about, no. We will take a 1035 with a loan on some different products. So we can certainly talk about that offline and run some scenarios, but we will not pull over any kind of a loan to the index choice or the guaranteed UL, our advantage choice.
Okay. Well, those are the two questions that we were posed. So I think very good job. I do greatly appreciate it. And one thing I can speak to for those of you that don't already have a prior experience with Protective and Protective Life's processes and what they do, they're one of the smoothest companies that we actually work with. We've been in concert with them for a long time. We've had a great partnership with them, and they're truly a business partner to National Brokerage. They do a great job for us on the processing time. Because one thing that we do, at National Brokerage, we not only just run the quotes and show you who's the best, competitive marketplace, but also, is the carrier going to treat your client right, or is the process going to go smoothly? Because again, that's one thing you don't want to have as a nightmare going through the process. And I can truly attest to the fact that Protective Life is a true partner with us. We have great service from them, and so we look forward to doing business with them because it's a pleasure to do so, and they do a really good job with what they do. So just wanted to kind of plant that seed as well. With that, I think we will conclude the webcast. I do greatly appreciate you joining us this morning. And if you have any questions, reach out to your marketing rep. Again, the number is 800-377-6344. And we look forward to speaking to you soon. Thank you very much.